Yes, very good morning, everyone. How are you all? Everyone fine? So, let us start one more accounting standard revision for CA Inter Advanced Accounting paper. Today, we'll have AS 13, that is Accounting for Investment. Let us start the revision. Are you all ready? Yes, sir. So, first, we'll discuss the accounting standard part. Then, we'll cover the accounting aspect from examination point of view. Got this point? Chapter is very important. One question will come from this chapter of 8 to 10 marks. Got this point? Yes, sir. Now, what is the meaning of investment? Investment means investment are those assets which are held by entity for earning income by way of either dividend or interest or rental income. For example, if you have done investment in equity share, so you will earn dividend income. And suppose you have done investment in debenture etc., so you will earn interest income. And if you have done investment in some property, so you may give that property on what? Rent to generate some rental income. So any asset held by entity for generating income by way of dividend, interest or rental will be an investment. Or for capital appreciation, means if you are holding some asset for capital appreciation, for example if you are holding some property for capital appreciation, so that will be also your investment or for any other benefit. Understood? One clarification has been given that any shares, debentures or other instrument which are held as stock in trade, which are held as stock in trade are not investment. They are not investment. However, because they are held as stock in trade, so that become inventory. For example, if doing you are doing business of purchasing and selling equity shares only, so can you say that will meet the definition of investment because they are held for the purpose of sale in the ordinary course of business? Then it will meet the definition of investment as sorry inventory. Then AS2 actually scoped out that particular shares and debenture from the valuation from the accounting standard 2. So their measurement will be done as per AS 13 only. So however they are accounted for and disclosed in the financial statement as per AS 13 to the extent they relate to the current investment, means their measurement will be based on what? Current investment. Now for the purpose of measurement, all the investment are divided into two categories. One is known as current investment, one is known as long term investment. Correct? So what is current investment? Current investment are those investment which are readily realizable, which can be realized easily, which are readily realizable and is intended to be held for not more than 1 year from the date of their purchase, means when such investment are made. So there are two conditions: they are readily realizable and is intended to be held not for more than 1 year from date of their acquisition. Correct? If these two conditions are satisfied, then the investment will be known as current investment. Now from AS 13 point of view, this current investment are measured at cost price or fair value, whichever is lower. So their measurement is done, means the carrying amount of that investment will be what? It will be valued at cost price or fair value, whichever is lower. Fair value is nothing but market price. Market price means for listed shares, can I say, we can of course calculate, we can obtain the market price, but they are unlisted shares, for that market price is not available. Then we need to find out a fair value. I think in amalgamation chapter you have the intrinsic value. So intrinsic value can be one method to calculate the fair value of that particular shares etc. So therefore they have written cost price or fair value, whichever is lower. Correct? Now one thing we have understood, that we need to compare cost price or fair value at the end of each year for each investment. So what AS 13 says, that carrying amount of current investment determined either on individual basis or on category of investment basis, but not on overall basis. Means when you are comparing cost price and fair value, you need to apply that comparison on item by item basis. Means for each item you need to find out cost price and fair value and then compare. Or you can do on category basis, but overall basis is not allowed. However, from exam point of view, you need to apply always item by item basis. Okay sir? Now for current investment, any reduction in fair value, means suppose the cost price is equal to 100 and the fair value is equal to 80. So how much reduction? 20 is the reduction. This 20 will be charged to profit and loss account. What journal entry will do? Profit and loss account debit to investment. So journal entry is what? Profit and loss account debit to investment, or you can say fair value loss account debit to what? Investment, and that loss will be transferred to profit and loss account. However, subsequently there may be some reversal of such reduction. Means subsequently, suppose once again the cost price 100 and the fair value becomes suppose 120, then of course the lower is 100 only. So whatever reduction you have done in prior year that require reversal, that is known as reversal of prior reduction. So that reversal will be also done from PL account only. Then our journal entry will be investment account debit to profit and loss account. Got this point? Then what are long-term investments? Simple. Long-term investment are those investments which are not current investments. Simply, the long-term investment is an investment other than current investment. Now, how to find out the carrying amount of long-term investment? The carrying amount of long-term investment will be cost price. Means generally the long-term investment will measure at cost price only. However, if there is some permanent decline in the value of such investment, if there is some permanent decline in the value of such investment, so AS 13 says we need to create a provision of such permanent decline, correct? So therefore carrying amount will be cost price less provision for permanent decline. This will be the carrying amount at the end of each year. Means we should not create any provision for temporary decline. So if the decline is in the nature of temporary, decline, then we will not create any provision for such temporary decline. So provision need to be created only for permanent decline. Understood? Yes, sir. So what will be journal entry for creating such provision? Profit and loss account debit to provision for permanent decline. Correct? Means you can say directly we are not reducing that loss from the value of investment. We are creating a separate provision for long-term investment. So journal entry become profit and loss account debit to provision for permanent decline. However, subsequently, if suppose there is an increase in the value of asset, or now that decline does not exist, means there is a reversal of such decline, then we reverse the provision whatever we have created, will pass one journal entry provision for permanent decline account debit to profit and loss account. So when you create what is journal entry profit and loss account debit to provision for permanent decline, and the reduction, if the reduction in carrying amount is reversed when there is a rise in the value of investment, or if the reason of reduction is no longer exists, then we reverse that. Then our journal entry become provision for permanent decline account debit to profit and loss account. Got this point? Yes, sir. Now the what they have given that for creating provision, always we create provision on the basis of individual basis. Correct? Means for this we don't apply category basis or global basis, overall basis. We apply, means we always create provision for permanent decline for each item separately, for each item of investment separately. Now coming to investment property, what AS 13 says that investment property are always long-term investment. Means investment property cannot be current investment. So what is the meaning of investment property? So investment property is an investment in land or building. So if you have done some investment on land and building, correct, land or building, that are held for earning income by way of rental or for capital appreciation or for both. So what do you mean by investment property? Any property which are held for earning rental income or for generating or for capital appreciation or for both, that will be known as investment property. Means can is a property, if they are held for sale in the ordinary course of business, that will become inventory. If the property are held for production purpose or for supply of goods or services or for admin purpose, that will become property, plant and equipment, and AS 10 will be applicable. But any property, means land or building, that are held for earning rental income or for capital appreciation, that will be investment property and will be covered under AS 13. But what AS 13 says that investment property are accounted as per cost model as prescribed under AS 10. So investment property will be measured as per cost model. Then you need to go to cost model, we need to apply cost model as per AS 10. As per AS 10 means, can I say in this way? Just try to understand what I want to say. Suppose there are some property which are held for sale in ordinary course of business, then apply AS2, then their measurement will be cost price or NRV, whichever is lower. If that property is held for production or supply or for admin purpose, then of course AS 10 will be applicable. Now AS 10 says cost model or revaluation model, whatever you want to apply. But if it is held for rental income, held for earning rental income or for capital appreciation or for capital appreciation, then AS 13 will be applicable. And AS 13 says apply cost model as per the requirement of AS 10. Means apply cost model. Cost model as per AS 10 means first thing that investment property cannot be revalued. No revaluation model is applicable for investment property. But you need to apply cost model as per the guidance given under AS 10 only. So cost model can I say we need to find out cost price, less accumulated depreciation, less accumulated impairment loss if any. This will be the carrying amount as per the cost model. So depreciation, investment property will be depreciated as per the guidance given under AS 10 and will be impaired as per the guidance given under AS 28. Chalega? Understood this point? So what they want to say, how to find out carrying amount as per cost model, that will be as per AS 10. So cost price less accumulated depreciation less accumulated impairment loss, this will become carrying amount. Got this point? Yes sir. So investment property will be an exception. Their measurement will not be covered under AS 13. For measurement we need to go to what? AS 10. Understood. Now coming to how to find out a cost price of investment. How to find out a cost price of investment? So acquired against monetary consideration. If they acquired against monetary consideration, so whatever purchase price, add any brokerage of fees, add any taxes on purchase, add any registration fee or expense to claim title, means all the directly attributable expenses will be capitalized. So this become the cost price. Very simple. Yes sir. Now if it is acquired in exchange of non-monetary consideration, if it is acquired in exchange of non-monetary consideration, then the cost price of investment acquired will be fair value of asset given up plus minus cash adjustment of fair value of investment acquired, whichever is more clearly evident. I think this you have understood. So fair value of asset given up plus minus cash adjustment of fair value of asset received or acquired, whichever is clearly evident. Same point we have done under AS 10 also for acquisition of property, plant and equipment for non-monetary consideration. Got this point? Yes sir. But if acquired in exchange of shares or other securities, if acquired in exchange of shares means you acquired some investment and you have issued equity shares of your company, then in that case cost price of investment acquired will be equal to fair value of securities issued. So it will be equal to fair value of securities issued, means shares or debentures issued. Correct? So cost price of investment acquired in that case will be equal to the fair value of securities issued. Chalega? Now coming to reclassification of investment, this is very important from examination point of view. 5 marks question can be asked from this particular topic. Reclassification means what? Of course entity can reclassify any long-term investment to current investment or current investment to long-term investment. So whenever there is a reclassification, at what amount the reclassification will be made, that we are going to discuss right now. So when long-term investment are reclassified as current investment, so transfer are made at lower of cost price or carrying amount on the date of reclassification, whichever is lower. So cost price and carrying amount on the date of reclassification on the date of transfer, whichever is lower. So carrying amount means what? Carrying amount means cost price less provision for permanent decline. That is what? Carrying amount. Understood now? Because long-term investment has been reclassified to current investment. So long-term investment, what is the carrying amount? It is cost price less provision for permanent decline. Correct? Cost price or carrying amount, whichever is lower on the date of transfer. When current investment are reclassified to long-term investment, then transfer are made at, means reclassification is done at cost price of fair value, whichever is lower on the date of transfer. So cost price of fair value on the date of transfer, whichever is lower. Understood? Let me take one question based on this, because important to this type of question can be asked in exam for 5 marks. You can see question 5. Blue Chip Equity Investment Limited want to reclassify its investment in accordance with AS 13. State the value at which investment have to be reclassified in the following case. Long-term investment in company A costing rupees 8.5 lakh are to be reclassified as current, means long-term to current. The company had reduced the value of this investment to 6.5 lakh. This become carrying amount. Carrying amount to recognize other than temporary decline. So of course that carrying amount is after creating provision for permanent decline. The fair value on the date of transfer is 6.8 lakh. This is not relevant. So transfer will be made at cost price or carrying amount, whichever is lower. So what is the lower? Lower is 6.5 lakh. Therefore the transfer will be done at this amount. Chalega? Then second, long-term investment in company B costing rupees 7 lakh are to be reclassified as current. The fair value on the date of transfer is 8 lakh and the book value. Book value means what? Carrying amount. So you can see carrying amount is the cost price only. Therefore in this case the transfer will be done at cost price only, that is 7 lakh, that is 7 lakh chalega. Once again this fair value is not at all relevant. Now current investment costing rupees 10 lakh are to be reclassified as long term as the company want to retain them. So current investment will be reclassified to long term. The market value is fair value on the date of transfer is 12 lakh. So we'll do cost price of market price. Market price is nothing but fair value, whichever is lower on the date of transfer. So it is lower is what, 10 lakh. So we'll do the reclassification at 10 lakh chalega. So this type of question can be asked many times in exam, can be again repeated. Now let us come to next point. Ki disposal of investment. Whenever there is a sale of investment, so we need to calculate gain or loss on sale, and that gain or loss on sale of investment will be transferred to PL account. So how to find out that gain or loss on sale? So we'll first find out net disposal proceed. Net disposal proceed means what? Sale proceed less cost of disposal. Sale proceed less cost of disposal, that become net disposal proceed. From this deduct carrying amount of investment sold. This will become gain or loss on sale of investment. Now how to find out carrying amount of investment sold? So what AS13 says that to find out carrying amount of investment sold, always will use average carrying amount. Means the carrying amount will be the average carrying amount when the part of investment has been sold. Suppose you purchased 10,000 equity shares. Now out of 10,000 equity shares you sold 2,000 equity shares. So we need to find out average carrying amount, and that average carrying amount will become the average carrying amount of that investment sold. So when a part of holding of an individual investment disposed of, the carrying amount is required to be allocated to that part on the basis of average carrying amount of the total holding of the investment. Means in simple word, can I say the cost price of investment sold will be calculated by applying weighted average price method. Weighted average price method. We'll understand how to calculate weighted average price by taking some questions. Okay sir? Yes sir. Now applicability of AS13 means what is the scope of AS13. So this standard deals with whatever we have done, but does not deal with the basis for recognition of interest, dividend and rental income. Means when to recognize interest income, dividend income and rental income, that is actually covered in AS. These two are covered under AS9 and this is covered in AS19. Therefore outside the scope of this chapter. Operating of finance lease, this is covered under AS19. Investment of retirement benefit plan and life insurance entity to investment of retirement benefit plan. Correct now. So this is actually covered under AS15. Got this point? Mutual fund, bank and public financial institution, no AS, till now no accounting standard on this. So these are outside the scope of this chapter. Disclosure requirement you can read by your own. So this is the AS13 as per the accounting standard is concerned. Now let us come to accounting part, means how to do the accounting part. Some portion we have not discussed, that will discuss with the accounting part. Correct now. Now for accounting purpose, entire investment are divided in two categories. The entire investment are divided in two categories. One is known as investment in fixed income bearing investment. Correct now. Second is known as variable income bearing investment. Fixed income bearing investment means what? Which will generate some fixed income. Variable income bearing investment means what? Those investment will generate some variable income. For example, investment in equity shares. Now whether equity dividend will be received or will not be received, that is not fixed. That will vary according to the profit of the company. Correct now. But when I say fixed income bearing investment, that is what? Investment in debentures, government bonds, government securities. These are fixed income bearing investment. So let us understand the accounting treatment for the fixed income bearing investment and variable income bearing investment. Got this point? So let me discuss each accounting treatment. So you can see this is what accounting treatment of fixed income bearing investment. Chalega. So for purchase of investment, when you purchase such type of investment, if you are purchasing directly from company, correct now, then journal entry is investment account debit to bank. Whatever amount you are paying, that become the cost price. Means cost price already we have understood. Cost price means purchase price plus brokerage, stamp duty, etc. Correct now. So investment account debit to bank you have understood. Yes sir. But if you purchase from stock market, so whenever we are purchasing from stock market, so on the date of purchase, can you say we need to also pay interest from last due date to the date of purchase to whom? To the seller. Correct now. Means suppose just try to understand. This was the last due date of receipt for interest. Suppose this is 1st April, this is 31st March and the due date of interest is 30th June and 31st 12. Correct? These are the two due date. Means company will pay interest on these two date on half yearly basis. Now if you are purchasing investment, in the fixed income bearing investment, for example investment debenture, at this point of time, correct, and suppose this is 30th September, let us say this is 30th September, correct, understood now. So up to this, so company has already paid interest to the previous holder, means to the previous holder of that securities. But if you are right now purchasing from stock market, so this interest belong to whom? This interest belong to previous holder, correct. But now company will pay you on this date because you are holding the investment after purchase. So actually receive interest for how many months? 6 months. So you will receive for 6 months, but out of that 6 months, 3 months interest belong to what? The person from whom you will purchase, that is the seller, we can say. So on the due date, when you are purchasing from, on the date of purchase, so can you say there are some interest which you need to pay from the last due date to the date of purchase to the seller, correct. So therefore the journal entry become investment account debit to interest account debit to bank, investment account debit to investment account debit, interest account debit to bank. Investment will be always debited at X interest cost price. Now how to calculate X interest cost price, that I will explain. Interest will be interest paid from last due date to the date of purchase, and bank will become interest cost price, means investment will be always debited with the X interest cost price. Now what is X interest cost price, that we need to understand. We have already understood that when investment are purchased from market means stock market, interest will be paid to the seller. We need to pay interest to the seller from last due date of interest to the date of purchase, from the last due date of interest to the date of purchase, irrespective of the fact whether the quotation is X interest or cum interest, because the buyer need to pay some interest to whom? To the seller, from the last due date of interest to the date of purchase, because that interest belong to the seller. And now on the next due date, company will pay interest to the buyer. Understood what I am saying? So whenever investments are purchased, once again, whenever investment are purchased from the stock market, interest will be paid to the seller from the last due date of interest to the date of purchase. Now how to calculate that X interest cost price? Okay. So always use this format in exam, whether the quotation is given X interest or cum interest. So we'll start with cum interest purchase price. Then we'll deduct interest paid to the seller from the last due date of interest to the date of purchase. This will become X interest purchase price. This will become X interest purchase price, not cost price. This become X interest purchase price. Now in this we'll add all the expenses on purchase, for example brokerage, stamp duty, taxes, whatever you are paid, for example securities transaction tax will be added. So this will become X interest cost price, X interest cost price. So this is what, suppose A, this is A, this is B, and this is what? B. So you need to find out A and B. So this journal entry will be done. This amount will be A, this amount will be, and this will be A plus B. This will be A plus B. Understood what I am saying? Correct. So this journal entry, have you understood? So you need to find out what is the X interest cost price and interest element. So X interest cost price means what? Start from cum interest purchase price, deduct interest paid, that will become X interest purchase price. In that add all expenses on purchase, for example brokerage, stamp duty, securities transaction tax, that will become X interest cost price. So investment account will be debited with X interest cost price. So the objective will be to calculate this amount. Of course we can calculate, Now once you purchase the investment, can you say on the next due date the buyer will receive interest. So on receipt of interest from company directly, the journal entry will be bank account debit to interest, bank account debit to interest. So can you say company will pay interest on each due date, and that interest will be from last due date to current due date, from last due date to current due date, correct. Now so bank account debit to interest income, this interest income will be transferred to profit and loss account, correct. So on interest received on due date, what journal entry? Bank account debit to interest income, chalega. It means one thing is clear, that on each due date of interest, on each due date of interest, interest will receive from company from last due date to the current due date on nominal value of investment. This interest always we calculate on nominal value of investment. I hope you all know about nominal value. The interest will be calculated on nominal value, either on, can I say, that can be either on annual basis or half yearly basis or quarterly basis or monthly basis. Means when I am saying annual basis, it means one time in a year. When I am saying half yearly basis, means two time in a year. When I am saying quarterly basis, means 4 times in a year. And when I am saying monthly basis, so for 12 times in a year. That will depend upon the information given the question. Normally in exam they give half yearly, but it can be quarterly also, correct? So it means when it is half yearly, so it means it is 2 times in a year. The due date will be 2 times in a year. When it is quarterly, it becomes 4 times in a year. So what is the due date that you need to find out from the information given the question. Got this point? Then on sale of investment, can I say for sale of investment, first we receive the sale proceed. So journal entry what? Bank account debit to interest, bank account debit to interest to investment. Once again, can I say on the date of sale, now the seller will receive interest. Means if I am the seller, so I will receive interest from the last due date to the date of sale, because can I say that during that period I was holding the investment, but on the next due date now company will pay to the holder to whom I am selling. Got this point? Therefore, from the buyer we receive some interest from last due date of interest to current to the date of sale. So journal entry become bank account debit to interest to investment. Investment will be credited with the net sale proceed. What is the net sale proceed? Of course, that will be X interest sale proceed. But how to calculate this we need to understand, correct? So entry become bank account debit to interest to investment, correct? Now can you say on sale there will be gain or loss on sale? So of course we need to find out what is the gain or loss on sale of investment. So we need to understand how to calculate gain or loss on sale of investment. The gain, what journal entry will do? Investment account debit to gain, and the gain will be transferred to PL. For loss, what journal entry? Loss on sale of investment to investment, and loss will be transferred to PL account. So for gain journal entry, investment account debit to gain. For loss, loss on sale to investment account. Now how to calculate? Once again we have understood that on sale of investment, interest will be received from the buyer from last due date to the date of sale, irrespective of quotation. It can be X interest, it can be cum interest. Got this point? Yes sir. Calculation of gain or loss on sale of investment, and of course we need to also calculate net sale proceed. So first we'll write down sale proceed, means cum interest sale price. We'll start with cum interest sale price, means always start with cum interest sale price. I will explain this entire working with one question also. So always start with cum interest sale price. Got this point? Less interest received from buyer. So interest will receive from buyer from the last due date to the current date of sale, that we can calculate. So this will be X interest sale price. X interest sale price. From this will deduct all the expense on sale. So expenses on sale means brokerage, tax, etc. Whatever is expenses incurred to make such sale, that will be deducted. So that will become net sale proceed. From the net sale proceed, if you deduct average cost price of investment sold, means average cost price of investment sold. So how to find out that average cost price? That also when we discuss average cost price of investment sold, that will become gain or loss on sale. So this is the format to calculate gain or loss on sale of investment. Understood how to calculate? First we'll start with the cum interest sale price. From that minus interest received, that will become X interest sale price. Then less expense on sale, that will become net sale proceed, correct? From that deduct average cost price of investment sold, that will become gain or loss on sale. Understood? Means you need to find out this become A and this interest become B, correct? So you should write down in the journal entry, this will be A, the interest will be B, and this will be A plus B. This will be A plus B, and the gain or loss whatever we have calculated with that format, with that we will do this journal entry. Chalega? So you have understood sale also? Yes sir. Now as per AS 13, the gain or loss on sale of investment will transfer to PL account, so that will be transferred to PL account. And as per AS 13, right now we have done the cost price of investment sold. The carrying amount will be calculated by applying weighted average cost price method. So to find out cost price of investment sold, we'll apply weighted average price method, correct? Until this question informs us to use FIFO method. Means if the question is silent, always will apply weighted average price method. If question says, then we'll apply first in first out method, correct? Now so we'll take one question from weighted average price method and one question from first in first out method. Means it is quite possible in exam they are asking first in first out method, correct? Understood? So however, if question require, then the cost price of investment sold is calculated by applying first in first out method. This will depend totally on question. This will depend totally on question. Then at the end, whatever closing investment, can you say closing investment need require measurement? It can be current investment, it can be long term investment. If current investment, so can you say we should compare cost price with the fair value means market price, and if the market price is less than cost price, so there is some reduction in the value. That reduction in the value will be charged to profit and loss account. Means at year end, the closing investment will be valued as per AS 13 as follow. If current investment, then value at lower of cost price and fair value. For reduction in the price will pass one journal entry PL account debit to investment. If long term investment, to valued at cost price, but if question is silent, always will assume that investment are current investment. Will always assume investment are current investment in the question is silent. Got this point? Itna? Have you understood this much? Correct? Let me take one question. So come, let us do one question. Come to question number 3. What is given? A purchase on 1st March rupees 24,000 5% Bharat debenture stock at 90 come interest at 90, because this is rupees 24,000, this is nominal value. This is nominal value, and they is given at, this is actually at rupees 90 come interest, at rupees 90 come interest. Understood? It means when it is given at rupees 90 come interest, means for one debenture you are paying 90 rupees, and you can see they have not given the nominal value of debenture, means face value of debenture. So total nominal value is given, face value is not given, so we'll assume 100. So can you say the come interest price will be 90% of 24,000. So what is the purchase price? That will become 90% of 24,000. 90%, or we can say in this way 24,000 divide kar do 100 into 90, or we can say in this way directly 24,000 into 90%. Both will give same answer. Both will give same answer. Chalega. So this is nominal value, and this is what? Purchase price per debenture. Per debenture. Interest being payable on 31st March and 30th September each year. So these are the due date they have given. Due date has been given. Stamp and expenses on purchase amounted to rupees 20, and brokerage at 2% was charged on the cost. Interest for half year was received on due date. On 1st September, rupees 10,000 stock was sold at 92x interest. So once again on 1st September, actually they have sold 10,000 stock at 92x interest, less brokerage at 2%. On 30th September, 8,000 stock was again purchased at 91x interest plus brokerage at 2% and charges of rupees 10. On 1st December, again they have sold 6,000 stock was sold at 94 come interest less brokerage 2%. The market price of the stock is given, which was 91%. The market price is given at year end. So year end is what? 31st December. Means this is we are following financial year is what? From 1st January to 31st December. So the investment account for the year end 31st December, marking all calculation in means all the calculations will be done on monthly basis. This is the entire question. So let us do this question, everyone. So already I have timeline, already it is prepared. So you can see this is 1st Jan to 31st 12. For this timeline is very important to understand. So first write down the due date. Due date is given 31st March and 30th September. These are the two due date. So first always write down the due date. So you need to first identify what is the due date given in the question. Then identify what are the date of purchase. So one is 1st March. On 1st March they purchased nominal value 24,000 at 90 come interest. It is given come interest, and they have given brokerage paid 2%, stamp duty 20. So of course this will be plus, this will be plus. Then on 1st September it is given sale. Nominal value was sold 10,000 at 92x interest. It is given the question. And less, of course, from this whatever brokerage paid, that will be deducted because expense on sale will be deducted from sale proceed only. So that is 2%. Correct. Then on 30th September, means on the due date, they have again purchased nominal value of rupees 8,000 at 91x interest, brokerage 2%. Then there was some charges, some expense of rupees 10. Then on 1st 12, Again they have sold nominal value of 6,000 at 94 come interest. Brokerage is 2% and interest is what? 2 months. Now whenever this is done, first find out on the date of purchase and on the date of sale how much interest will be paid or received. That is most important. Means how much interest will be paid and how much interest will receive on the date of purchase and date of sale from the respective buyer or seller. Correct. So on this date we have purchase investment. It means we need to pay interest. We need to pay interest to the seller from last due date. So what was the last due date? Okay, last due date was 30th September only. So 30th September, October, November, December, January, February. 5-month interest will be paid. So 5-month interest means on 24,000 is the nominal value. Rate of interest was how much? The rate of interest is given how much? 5% Bharat debenture. So 5% into 5 by 12 will do. So how much interest will be paid? Batao. Interest will be paid of which amount? You can easily calculate this. Bolo. 1 minute. Where is my calculator? Okay. So of course we can calculate this. Yes sir. So that we can calculate. I have already calculated. This will come 500. This will come 500. Understood? Yes sir. Then on 1st September, can you say some investment was sold? So it means we receive interest from whom? From buyer from last due date. What is the last due date? 31st March to 1st September. So it is what? March, April, May, June, July, August. So 5 month, 5 month interest will receive on 10,000. So we'll do 10,000 into what? 5% into what? 5 by 12. This amount will come how much? Check karo. So this amount will be how much? 208. So 208 interest will be received. Correct. Now on 30th September, this is thoda interesting. Listen carefully. Ki on 30th September, this is the due date only. On the due date, you have purchased 8,000 nominal value Bharat debenture. Correct. Means in this case, actually two situations may arise. Just try to understand. Ki on this 8,000, if you are paying 6 months, because this is the date of purchase and last due date is what? 3 months, 31st March. So it is 6 months only. 6 months. So we can say in this way, just try to understand. There can be two situations. Ki either means the buyer will pay interest to the seller for 6 months and then the buyer will receive directly from company for 6 months. So will pay for 6 months and then we receive for 6 months. So ho gaya happy. Or what will say? Will not pay any interest. Will not pay any interest to buyer. So company will pay directly to whom? Seller. Understood? So there can be two situations. Understood? First situation is what? First situation we have purchased 8,000 nominal value debenture. So on that we'll pay interest to the seller for 6 months and will receive from company for 6 months. Or second situation may be what? Will not pay any interest. So will not receive any interest on this 8,000 for 6 months. So that depends upon thoda sa we need to take assumption. So what I will suggest ki whenever it is X interest quotation, so this amount whatever we are paying, that is X interest. So in that case assumption should be what? Ki no interest will be paid and neither interest will be received. Means will not pay interest to seller nor we receive from company. But if the quotation is come interest, then you can't take this assumption. If the quotation is come interest, means you are paying along with interest. So in that your assumption is what? Ki you are paying along with interest to whom? To the seller. Now you receive from company directly for 6 months. So that assumption will prevail. So I will say ki in this quotation is what? X interest. Therefore our best assumption is what? If X interest, the company will pay directly to seller. It means the buyer will not pay to the seller and will not receive from the company. But if the quotation is come interest, then I will say the assumption should be what? Because the quotation is come interest, it means that price is inclusive of interest. Correct now? Price is inclusive of interest. It means in that case, can you say the buyer is paying to the seller for 6 months and then they will receive from what? Company for 6 months. So company will pay to the buyer, means investor will pay to the seller and will receive from what? Company. Will receive from company. Got this point? So this situation will prevail. So because the quotation is X interest, so I will say this assumption will be more appropriate. However, from exam point of view, if you take this assumption or this assumption, your ultimate answer remains same. Your ultimate answer remain same. Understood? But I will suggest that if X interest quotation, so better assume this. If come interest, then better assume this. The next point, so here the 0 month interest, so there is no interest paid. Then once again on first 12, nominal value 6,000, debenture was sold. So what was the last due date? Last due date was 30th September to first 12. It is become October, November. So 2 month. So 2 month interest will be received. So how much? 6,000 into 5% into 2 by 12 you will do. So how much it is coming? But it will be 50 rupees. So 50 rupees interest will be calculated. So first you need to what? Do this analysis. Once you have done this analysis, then the calculation part is very easy. Now let us come to the accounting treatment. So I am showing from this. So first, but the opening balance is not given. First write down, means you will prepare this format. This format is what? In this format we write down there nominal value. Here we write down interest, and here we write down amount. So it will be this presentation. So in the debit side, credit side, there will be 3 column what? Account. 3 column account. We call it 3 column account. Of course, this will be date. This will be date. This will be particulars. This will be nominal value, interest, and amount. So first write down opening balance. So opening balance 000. There is no need to write down. Then first transaction. Then go as per this date. This date is very important. The first date is what? 1st March. So 1st March they purchase. So we write down investment account debit to bank. So investment account debit to bank. What is the nominal value of debenture purchase? 24,000. How much interest you have paid? Already we calculated. How much? 500. To interest paid is what? 500. Now this amount we need to calculate. How to calculate this amount, that we need to understand. For that, one working note is required. So I will suggest that you need to use this format. Always use this format. Start with what? Write down nominal value and close it, so that you can understand nominal value is this amount. Why? Because you require nominal value for calculation of interest. Nominal value required for calculation of interest. Then what is the come interest purchase price? So in this come interest purchase price is not given, but from come interest you will do less interest paid and X interest purchase price. It is come interest quotation only. What is the come interest? It is given what? 24,090%. So 24,090%, how much is coming? Or better, I will only show you. If I will explain this, you will not be able to understand. So what is the date of purchase? 1st March. So what is the come interest? Come interest purchase price, that is 24,000 ka 90%. How much it is? 24,000 90%, 21,600. 21,600, correct? Then from this we will do less interest paid. Already we calculated that interest paid is for how many months? Already we calculated 5% and for 5 months. So that already we calculated. How much we calculated? That was 500. So this will become X interest purchase price. So this will be 21,100. Now in this we'll add all expenses. So there was some brokerage given, and there is one stamp duty given. Stamp duty how much given? If you see, stamp duty was given how much? It was given 20 rupees and brokerage is 2%. So stamp duty is 20 rupees, brokerage 2%. So 2% of what? That is one challenge. Ki 2% of this price or this price. So 2% actually we are paying to broker, and case to broker we pay brokerage on the basis of contract value. So in this the contract price was come interest. So it means this was the contractual amount. So you will calculate on this 21,600. So brokerage will be always on contract price. In this it was the contract price. The contract price can be X interest also. It can be come interest depending upon the contract. Got this point? So 2% of 21,600, it is coming how much? 432. So it will be 432. Now what is the total? total become how much batao? Total is 21552. So this is 21552. Got this fine. So this become x interest cost price. Chalega. So with this we'll do the journal entry, that is what? Investment account debit to bank. So you can see we have written that amount only 21552. 21552. Understood this? First part have you understood? This point have you understood? One by one we'll go. Take it. Now after 1st March, 31st March will come, so company will pay interest for 6 months. Company will pay interest for 6 months. So what journal it will do? Bank account debit to investment, means investment account will be created, and because right now the holding is only 24,000, so we receive interest for 6 months. We write down by bank 24,000 5% into 6 by 12, and we receive 600 interest income. You can see on that 24,000 already we have paid interest of 5 months, and now we are receiving interest for 6 months because we were holding that investment for 1 month only. That is from which date to which? From 1st March to 31st March, 1 month. So ultimately 600 minus 500, that 1 month interest will be created. Got this fine? Yes sir. So this was up to 31st March. Then on 1/9 what happens? Sale happened. So now let us come to sale. So sale has been done. So what journal entry will do? Ki this has been sold, to will item buy bank. So buy bank likh diya. Buy bank. What is the nominal value? Nominal value is what? 10,000. And interest already we calculated, that interest we receive for the 5 month, that is 208. Already we have calculated this. Now we need to find out what is the net sale proceed. What is the net sale proceed and what is the gain or loss on sale. Correct. So for that also we'll prepare one separate working note. So we write down, whenever we do sale, so we prepare one separate working note. So sale has been done on 1st September. Chalega. So we write down, what is the cum interest sale price. From this we minus less interest received. Interest received already we calculated, that is 10,000 ka 5% ka 5 by 12, that is coming 208. Chalega. So this will become x interest sale price. From this we deduct any brokerage etc. So brokerage is also given. So this will become net sale proceed. This will become net sale proceed. Understood? This is the format. Now just see first whether quotation is cum interest or x interest. The quotation is what? X interest. So 10,000 and 92% means 9,200 is x interest. Understood? So the quotation given is what? 9,200. So write down 9,200. Understood? Means can I say this is not given, but you can find out to complete this statement. However, cum interest sale price not relevant for accounting, but you can fill the blanks. 9,200 plus 208, this become 9,408. 9,408. Understood? Correct? Interest is always calculate nominal value. Therefore, you can write down somewhere nominal value is 10,000. Okay. Now, brokerage is given 2%. Now, you only say 2% will pay to broker of which price? Contract price. And you only say in this contract price is x interest or cum interest? It is x interest. So this become what? Contract price. So now in this the brokerage will be calculated on this amount. On this amount. Chalega. So this become how much? Of 9,200. 2% of 9,200. So that is how much? 184. So you can add on 184. And this become net sale proceed. So this will become how much? Batao? The net sale proceed will become 9016. 9016. Understood? Now this become net sale proceed. Now we need to find out gain or loss on sale of investment. So we'll do less average cost price of investment sold. So we need to find out average cost price of investment sold. Average cost price. Correct. So one simple formula I'll give you. The simple formula from examination point of view, so that you can avoid any mistake. Write down balance of, find out balance of amount column as per ledger, then balance of nominal value column as per ledger into nominal value of investment sold. Nominal value of investment sold. This is the formula. However, right now, so because can I say already we have done this accounting now. Up to this we have done the accounting. Only this is the accounting done. So can I say amount is what? 21552 and the nominal value is 24,000 only because we have purchased only, but there can be multiple purchases also. Therefore, that formula become relevant. I mean, right now we have done only one purchase, so this will become 21552. How to calculate 21552 divide by 24,000, out of that 10,000 sold. So what is the average cost price? So average cost price coming how much batao? It will come 8980. So 8980 minus cost, so gain is I think it is a 36. So gain is 36 what? So this is the calculation part. So what journal entry we are doing? Bank account debit to interest to investment, and for gain we are passing what? The journal entry investment account debit to investment account debit to gain. These two journal entry we are doing, correct? So you can see in this what we have written 10,000, and this is the net sale proceed 9016. This already we have accounted, and to gain we have written, you can see to gain 36 we have written. Understood? This gain will be transferred to profit and loss account, but gain write down in amount column, don't write down interest column. Interest column only interest will be incorporated. Chalega? Up to this any doubt? Then let us come to once again. So up to 19 we have done. Now let us come to 30th September. Now 30th September there are two things. One is what? It is due date of interest, means we receive interest, and there is what? One purchase also. And because purchase is on X interest, so on purchase, so we are not paying and we are not receiving, means we are not paying as well as we are not receiving interest. So first you do journal entry for what? Interest. So can you say on holding, whatever balance holding left, on that we receive interest from company. So out of 24,000, 10,000 sold, so on 14,000 we receive interest from company for 6 months. So write down buy bank. Buy bank, you can see buy bank. It is what? 14,000 into 5% into 6 by 12, interest received. Interest received. Again we purchase what? 8,000 on the same date. So to bank 8,000, no interest will be paid. And now we need to find out this 7436, how we have calculated. So we need to find out X interest cost price. So let us calculate. The same working note you can do, means the same format. So what was the nominal value of investment? Nominal value is 8,000. Now the quotation is what? You can see quotation is X interest. So X interest quotation is there. So 8,000 they have purchased at 90. This is 91 X interest. 91 na? It is 91. Chalega? So 91. Yes. यहाँ पे लिखेंगे. So they have given what? If you see, so they have not given come interest. Now they have given 8,000 into 91%. How much it is coming? So 8,000 into 91%, it will come 7280. 7280. And there is no interest in this. So this will be also 7280 only. Got this point? But in this brokerage will be calculated on contract price, and contract price is 7280. Contract price is 7280. So 7280 into 2%, how much? So 7280 into 2%, it is coming 146. I hope you are understanding. And they have given expense or charges rupees 10. So this will become what? X interest cost price. So X interest cost price becomes 7280 plus 146 plus 10. How much the amount is coming? Batao. It is coming 7436. 7436. So we'll do the journal entry with 7436. 7436, and interest paid is 0. Interest paid to the seller is 0. Got this point? Have you understood this particular point? So you can see they have done 7436 only. Yes sir. This also done. Are you able to follow me up to this point? Boliye. Now this also 30th September we have done. Now after 30th September then came 112. 112 May we have sold some nominal value of 6,000 at 94 come interest, brokerage 2%. Interest already we calculated for 2 months, means interest received for 2 months is 50 rupees. So what journal entry will do? Will do buy bank. You can see on 112 we have done buy bank 6,000, interest received 50. Now we need to find out net sale proceed and gain or loss. So once again the same calculation will do. Correct now. So you can see the same calculation. Let us do it. So it is 6,000. Now it was sold on 112 at come interest. So they have given come interest to 6,000 into what is the come interest price? Come interest price was 94%. So 6,000 into 94%. So So 6000 into 94%, how much it is coming? 5640. Coming 5640. Already we calculated interest on that. So 50 rupees interest already calculated for 2 months. So this will become 5640 minus 50, that is coming 5590. So this will come 5590. Correct. Now on this brokerage, now brokerage will be, you only say brokerage will be calculated on 2% of what? Of contract price, and contract price is what? Come interest quotation. The 2% of 5640 calculate karo. 2% of 5640, as per my calculation it is 113. So what is the net sale proceed? Net sale proceed means this minus this. So 5590 minus 113, it is 5477. 5477. Correct. Now we need to find out average price, average cost price of investment sold. This is only interesting, means normally student do mistake यहाँ पे. Average cost price of investment sold. Average cost price of investment sold. This you need to find out. Are you getting what I am saying? Bolo. So how to calculate this? So you need to find out balance of amount column. The best way is to find out balance of amount column. So right now we are into this situation. Abhi we have done accounting up to this na. Just try to understand. Right now we are into this situation. Correct. So we need to find out balance of amount column. The balance of amount column is this. Sorry. Balance of amount column will be what? Batao. I'm just doing this 21552 plus 36 plus 7436 minus 9016. This much. This is coming how much? This divided by 24,000 plus 8,000 minus 10,000. This become balance of amount column divided by balance of nominal value column. Into will do the nominal value of investment sold. The nominal value of investment sold is what? 6,000. So that formula you can apply. The balance of amount column will be 20,008. So this will be 20,008 rupees divided by 20,000. That is balance of nominal value into what? 6,000. So this will become average price, average cost price of investment sold. So what amount is coming? Amount will be how much? It is coming 5457. So 5457. It is coming 5457. So there is a gain of 20. So there is a gain of 20. Understood? Means what journal entry we are doing now? Net sale proceed is what? 5477 and gain is 20. With this we will do two posting. Correct? So we will do what? Bank account debit, interest account debit to investment. To investment will create it with the net sale proceed, that is 5477. Then for gain will pass one journal entry, investment account debit to gain with 20 rupees. चलेगा? Yes sir. So that is only done. Check करो. यहाँ पे लिखा है by bank 5477 and to gain 20. This much done. Now we'll come to closing date. Closing date is 31st/12. We'll do buy balance brought down. So buy balance brought down. So what is nominal value? 24,000 plus 8,000 minus 10,000 minus 6,000. 16,000 left. 16,000 left. Correct. Now can you say, because the year end is 31st/12 until now we have received interest only up to 31st, only up to 30th September. The last due date is 30th September and next due date will be what? 31st March. It means, can I say, for this year the interest of the last 3 months is not yet due. So that is known as interest accrued but not due. Interest accrued but not due. Correct now. So can I say, because we have already received 30th September interest, but can I say till now we have not received 3-month interest. Why we have not received? Because this the due date, the next due date is on 31st March. So company will pay on 31st March only. So this become interest accrued because we follow accrual concept. So interest accrued but not due. So interest accrued but not due, that will be also accounted. Will pass one journal entry, accrued interest to interest. Accrued interest to interest. That journal entry will come. So can you see, we need to recognize interest income for 3 months. Interest income for 3 months and accrued interest for 3 months. Correct. So 3 months on 16,000 will be calculated. So 16,000 into 5% into 3 by 12, 200 interest will come. And can you see, now we need to find out closing balance of this. So we'll find out first carrying amount. Carrying amount find out karo. Compare with the market price. So carrying amount will come 14,551 only. Correct. And market price will be 16,000. They have given 91. What is the market price given? Check karo, 91% they have given. Into 91% kar lo. whichever is lower करेंगे तो lower will come 14,551 only. Therefore there is no reduction in the value of investment. But if the market price less than what carrying amount, it means we need to reduce the value of investment by that particular amount. Then we'll pass 109 to PL account debit to investment. So this amount column will be closed. Amount column will be closed. Now we'll close interest column, and interest column, of course the balancing figure will come in debit side, and this amount will be transferred to PL account, 908. So just close the interest column and the balancing figure will come in debit side. That balancing figure will be income, and that income will be transferred to profit and loss account. And so this is the entire account. This is the entire account. Chalega. Have you understood this much? Okay. Okay, sir. I'll take one more question. Just give me 2-minute break. After 2 minutes, we'll 1 second take one more question. Okay, sir. Now, let me take one more question. Come to question 4, because one question I will show you by FIFO method also, because in exam FIFO method can be also asked. Gamma Investment Company hold 1000 15% debenture of rupees 100 each in Beta Industry Limited on 1st April 2009 at a cost of rupees 1,05,000. Means they are holding 1000 debenture, so it means that become opening balance. Interest is payable on 30th June and 31st December each year. So interest is payable on 30th June and 31st December as per information given the question. On 1st May 15,500 debentures are purchased. Now they have given number of debentures, and they have given come interest price 53,500. So one thing is clear, the nominal value will be what? 50,000. Nominal value is 50,000, and they have given come interest price. Thank you very much. They have given now price. On 1st November 600 debentures are sold. X interest 57,300. The nominal value is 60,000. On November 30, 400 debentures are purchased. X interest 38,400. So 40,000 is the nominal value. On 31st December 600 debentures were sold at come interest 82,500. So 60,000 is the nominal value. Prepare investment account showing the value of holding at cost using FIFO method. The market price they have given rupees 90. Correct. So now they have given FIFO method. So whenever question is silent, always use weighted average price method. Now in this question they have specified FIFO. Now if you are using weighted average price method, under marks. Correct? Yes, sir. So this is the question. let me show you with the timeline. The timeline is very important for this. So you can see on 1/4 there was an opening balance of nominal value 1 lakh and the cost price was 1 lakh 5,000. So can you say on this date, because we are holding, so the last year, can you say last year 3-month interest was accrued. So in the last year we have already accrued 3-month interest. Why? Because in the last year the last due date was 31st December and the year end is 31st March. So 3-month interest not received. So that 3-month interest of last year will be receiving current year. So already we have done one accrued interest. So can you say opening accrued interest is how much? That will be on 1 lakh into the rate of interest is how much? It is given 15%. Na? It is how much? 15%. So 15% into 3/12, this become the opening accrued interest. So 1 lakh into 15% into 3 divided by 12, how much? 3750. Understood? Then on 1st May they purchased nominal value 50,000 at 53,500 come interest. So of course, can I say on this date we need to pay interest from last due date. So 31st December, January, February, March, April, 4 months. So how much? It will be 50,000. It will be 50,000 into 15% into 4/12. But how much? 50,000 into 15% into 4 divided by 12. That is coming 2,500. So this much interest will be paid to whom? To the seller. Then on 30th June, can you see we receive interest? So how much interest will we receive? 1 lakh was the opening. Then we purchase 50,000. So on 1 lakh 50,000. So on 1 lakh 50,000, 15% into 6/12. Correct. So on 1 lakh 50,000 into 15% into 6/12. That is coming 11,250. So 11,250 interest will be received from company directly for 6 months because this is the due date. Then on 1/11 we have now sold 60,000 nominal value at 57,300 x interest. So on 1/11, the last due date is 30th June. So from 30th June to 1 November, it is what? July, August, September, October, 4 months. So 4 month interest will be now received on which amount? 60,000. to 60,000 into 15% into 4/12. How much? It's coming 60,000 into 15% into 4 divided by 12. How much? 3,000. Chalega? Yes, sir. Correct. Now on 30th 11. Now on 30th 11, what happened? Again they purchased nominal value 40,000 at 38,400. So they purchased. So on 30th November. So last due date was what? 30th June. So July, August, September, October, November. So 5 months. So 5-month interest will be now paid on 40,000. So 40,000 into 15% into 5/12. This, if you have done correctly now, so this chapter is very easy. Are you getting what I am saying? So this is coming how much? 40,000 into 15% into 5 divided by 12. That is coming 2,500. Correct. Now on 30th to 31st 12 is the due date, and this is also one date of sale also. Now once again some assumption is required. You can see you have sold some investment on due date. So there can be two things. Either on this investment, so you receive from buyer, then you will not receive from company. Means you are receiving interest from buyer, then you will not receive from company. Or what we can do, he will not receive from buyer, will directly receive from whom? Company. Correct. So that two assumption can be applied. Now if the quotation is come interest, you only say what is the better assumption. The better assumption is that we will receive from what? Buyer, and will not receive because it is come interest quotation. So 82,500 is inclusive of that interest amount. So of course we are receiving from buyer but will not receive from company. That assumption will prevail. If this is X interest, then you can assume that will not receive from buyer, will directly receive from company on this investment sold. So you can see the quotation is come interest. So investor will receive interest from buyer and will not receive from company. Means company will pay directly to the buyer. Correct. So this assumption will prevail, so we'll go as per this. So it means this is inclusive of interest, so we'll say 60,000 into what? 15% into 6 by 12, correct? So 60,000 into 15% into 6 divided by 12. How much? 4,500. And on this due date, can I say after this sale what will be left? 1 lakh plus 50,000, then minus 60,000, correct? Then again plus 40,000, then again minus 60,000. So what is the investment left, Jacob? 1 lakh. 1 lakh plus 50,000 minus 60,000 plus 40,000, then minus 60,000. This becomes 70,000. So on 70,000 we receive from company. We receive from company on the same date. So 70,000 into 15% into 6 divided by 12. It is 5250. So this become entire calculation. Let us now do the account. Correct. This much have you understood? Correct. Got this point? Chalo, account banate hain. So we'll prepare the account. So first to opening balance, you can see 1 lakh is the nominal value. Interest accrued was 3750. Already we calculated that 3-month accrued interest. 3750 will come accrued interest, and the cost price was 1,05,000. This was given in the question. Then on 1/5 to bank, nominal value is 50,000. Already we calculated interest of how much? 2,500. 2,500 interest paid. Only we need to now calculate X interest cost price. So that for that we'll prepare one working note. Working note will be very easy because there is no expense given. So in this, what is given? Come interest purchase price given how much? 53,500. And this is given. Interest paid is 2,500. So 51,000 become X interest cost price. Understood? So it means journal entry will be done. Means investment will be debited by 51,000. 51,000. So we'll say 51,000. Have you understood this particular point? Then on 30th June, we receive interest on 1,50,000. That is on 11,250. Already we calculated that also. 11,250. Then on 1 November, we have sold. So we'll do buy bank. Buy bank 60,000 sold. And we receive interest of rupees 3,000. Check karo how much we calculated. 3,000. Now we'll write down here net sale proceed. So net sale proceed will be X interest sale price. There is no expense on sale given. So X interest sale price will be there. So you can see what they have given. They have given X interest sale price only 57,300. So thank you very much. So X interest sale price will be 57,300. Now we need to find out what? Gain or loss on sale. So gain on loss on sale will be done on FIFO basis. On FIFO basis. Because till now, this is the opening balance. This is the opening balance. And this is the first purchase we have done. So this 60,000 is sold from opening balance only. Opening balance. So how to calculate the cost price of investment sold? That will be 1,05,000 is the cost price of first lot divided by 1 lakh is the nominal value. Out of this 60,000 has been sold. So what is the cost price based on what FIFO method? So 1,05,000 divided by 1 lakh into 60,000. The cost price is 63,000. It was sold at what? 57,300. So loss become what? Minus 57,300. That is 5,700 loss. So we'll pass one journal entry. Loss account debit to investment. Investment created with 5,700 only. That is done. You can see by loss 5,700. So in this way we can do it now. Understood? So you can see we have done one working note like this. The come interest sale price is not given. Less interest received 3,000 and X interest sale price given 57,300. Out of that we'll deduct. Means from that we deduct cost price of investment sold by FIFO method. So because this 60,000 has been sold from first lot, so we have taken the cost price of first lot divided by nominal value of first lot into what? Into nominal value of investment sold. That is coming 63,000. This become loss on sale. Understood? Have you understood this point? Then after 111, what happened? 3811 came. Once again purchase, and purchase was done at X interest price only. And the interest paid was 2,500. Thank you very much. This is very easy. So on 3811 to bank, 40,000 is the nominal value. Interest paid was 2,500. And X interest cost price given the question 38,400 only. Done. Understood? Then again on 31st 12, we have sold some investment. 60,000 was sold. So buy bank 60,000, and on that we receive interest for 6 months. Correct? That assumption we have taken, that is 4,500. You can see 4,500 we have already calculated. Now we need to once again find out X interest sale price. Now what is given? Check karo, come interest sale price given. So come interest sale price 82,500 minus 4,500. So 82,500 minus 4,500, that is 78,000 become X interest sale price. So 78,000 came. Now we need to find out the cost price of investment sold. So what we'll do? You can see out of the first lot 1 lakh, 60,000 sold means 40,000 left. Means now this 60,000 has been sold from first lot to the extent of 40,000 and balance 20,000 from second lot. Second lot is this. Means how to find out the cost price? Means can I say out this 60,000 has been sold from first lot to the extent of 40,000. Correct. So for 40,000 nominal value, what is the cost price? We'll do 1,05,000 divide by 1 lakh into what? 40,000. And balance 20,000 has been sold from second lot. So second lot, what is the cost price? 51,000. This 51,000 divide by 50,000, that is nominal value, into 20,000. Find out these two amount. So it is coming 1,05,000 divided by 1 lakh into 40,000 is equal to 42,000. And this become what? 51,000 divided by 50,000 into 20,000 is equal to 20,400. Total become what? Plus kar do 42,000. This is 62,000. 62,400. From this net sale proceed minus karo 78,000. So what is the gain? Gain is coming how much? Minus 78,000. Gain is what? 15,600 is gain. So 15,600 gain. So you can see 78,000 so we already created, and now gain to gain 15,600 came. Understood? I think understood. Now on 31st 12 we have received interest for the balance investment. The balance investment by bank and the balance investment is 70,000. So 70,000 ka 15% 6 by 12 5250 more received on the same date. Now we'll find out closing balance. Closing balance by balance brought down. The closing balance nominal value is 70,000. The once again we need to accrue interest for 3 months. So on 70,000 15% 3 by 12 2625 will come. Means can I say on opening investment, closing investment, always think about accrued interest by your own. Question will be silent for that. So accrued interest you need to do the journal entry by your own, do the posting by your own. Chalega? Yes sir. Now this amount will be what? The carrying amount and the market price whichever is lower. Correct now. So for that one working note already I have done. I'll just inform you how to do that working note. Correct. So the last working note will be what? Valuation of closing investment. So nominal value of closing investment 70,000. Carrying amount of closing investment balance is what? 69,000. When you do plus minus of all the amount column, that will come 69,000. That is nothing but cost price on FIFO basis. Now compare with the market price is given 90% of 70,000 and 90% will come 63,000. This is lower. Means value 63. Means how much reduction? 6,000. So for this one will pass one journal entry PL account debit to investment. Means investment will be again created by 6,000. So we have done by PL account 6,000 and the carrying amount will come 63,000. So with this amount column will be closed. Now we'll close the interest column. Interest column, the balancing figure will come in debit side and that is coming 17,875. This become interest income transferred to profit and loss account. This become entire investment account for fixed income bearing investment. So I have taken two questions. One is on weighted average price method. One is on FIFO basis. This type of question can be asked in exam for 8 marks, 10 marks, which is highly probable in exam. The next topic will be variable income bearing investment, that is investment in equity shares, correct, or preference shares. So that we'll do in the next session. Abhi right now this much for investment account. I hope you have understood. So we'll do one more part for this particular chapter. In that we'll discuss the accounting treatment for variable income bearing investment. Okay sir. Till then, bye bye. Thank you very much.